people, because they can make decisions every second in stocks, whereas they can't with farms, they think an investment in stocks is different than an investment in a business. I don't think there's any way to predict what the stock market will do 10 minutes from now, 10 days from now, or 10 months from now. So I work on what I think I'm able to do.
Hey guys, welcome back to Investing Mentors. Today, we're going to see how to save yourself, or rather, how you should think when the markets crash. Should you really panic about a market crash? The answer is, why would you? Okay, sorry, that's actually another question. But seriously, why would you panic if you own a business or a chunk of it? If you know it's going to be profitable in the long run, then why would you worry? This is not necessarily my perspective. It's from the man who said, our favorite holding period is forever. Let's hear it from the legendary investor, chairman, and CEO of Berkshire Hathaway, Mr. Warren Buffett, when he's asked about his thoughts on what was happening with the coronavirus and whether there was a reason to panic. He gives a very good perspective, like how you should think while purchasing a stock. He explains it using one of his favorite investments, General Motors. So this interview is from February 2020, which he gave for CNBC in the show Ask Warren. Let's hear it from him.
Well, I don't know I have any special thoughts beyond the news on the coronavirus. The very first day I bought stocks was March 12th, 1942. And the stocks were down about 2% that day, as it turned out. Unfortunately, I bought in the morning, so when I came home in the evening, and my dad told me the execution price, it was down 2%. But if you're buying a business, and that's what stocks are, businesses. In fact, people will be better off if they say, I bought a business today, not a stock today, because that gives you a different perspective on it. Then presumably, you're going to buy a farm, if you buy an apartment house, if you buy a business, you're going to own it for 10 or 20 or 30 years. And the real question is has the 10-year or 20-year outlook for American businesses changed in the last 24 hours or 48 hours? And you'll notice many of the businesses we own, partially own. American Express, we've owned it for 20 years. Coca-Cola, we've owned it for 40 years. Those are businesses. And you don't buy or sell your business based on today's headlines. And if it gives you a chance to buy something that you like and you can buy it even cheaper, then you're good luck, basically.
So yeah, purchasing stocks doesn't mean buying another asset class. Rather, it means purchasing a share, or a company, or a part of that company at a reasonable price. This has been Mr. Buffett's advice for so long, proven both by himself and his company. But a pandemic like COVID-19 is making an impact on the global economy, like the IMF warned. Interviewer Rebecca Becky Quick of CNBC shares this concern and asks if it was the right time to wait for a stock to go cheap. Like 10% cheap would be great. To this, Mr. Buffett said that it would make her very rich if that prediction was correct, but it is impossible to predict the market's direction for a short period of time. So it's always about how intelligent your decision is on that purchase. Let's hear it from the man himself.
Well, if you think that, then you're going to get fabulously rich if you're right. All you have to do is just keep buying at 10-day intervals and keep taking your 10-day prediction. If I knew what the market was going to do, obviously, but you don't. I don't think anybody knows what the market's going to do. I think you do know whether you're making an intelligent purchase at a given price. Everybody, when they buy a stock, if you're going to buy, say, General Motors that has 1,400,000,000 shares out, you should be able to take a yellow pad like you have there, and on one page, say, let's say it's selling for 30. It isn't selling that low, but that'd be 42 billion. You should say, I am buying the General Motors company for $42 billion because, and you should get it on a piece of paper. And then if you want to have a separate piece of paper, it says, I think I know what the stock market's going to do, so I know whether it'll be higher or lower in it. But you don't. I'll guarantee you cars are going to slow down someday. In 1932, General Motors had 19,000 dealers. That's more than all the auto dealers in the United States today. There were only 125 million people then, but they had 19,000 dealers. They produced or sold, and there was one month, I think, when they sold less than a tenth of a car, right at a tenth of a car per dealer. That was a terrific time to buy General Motors. and forget about the market. If you can predict the market, you don't need to read balance sheets. You don't need to read anything. You certainly can't predict the market by reading the daily newspaper. That is for sure. And you really can't. You certainly can't predict the market by listening to me. but you're buying businesses. And if you had planned to buy a local service station yesterday and it was closing day, I don't think you'd tear your hair out or anything like that. You'd have already looked at where it was located and the contract it had with the suppliers and made a decision on competition. People, because they can make decisions every second in stocks, whereas they can't with farms, they think an investment in stocks is different than an investment in a business or an investment in a farm or investment in an apartment house. But it isn't. If you get your money's worth in terms of future earning power over the next 10 or 20 or 30 years, you're going to have made a good investment. And you can't pick them from day to day. If you can do that, you can, well, I haven't met anybody yet that knows how to do it. You know, we buy a few stocks, but we don't look at, we're not buying the stock market. We're saying, I am buying, let's say American Express. We own American Express. There's 815 million shares out and sells it. This morning's 126 or something like that. So it's selling for roughly $100 billion. Now, the real question is whether the company's worth more or less than $100 billion. It isn't what the stock is going to do tomorrow or next week or next month. I don't have the faintest idea what our businesses will be doing 6 months from now or 12 months from now. I do think that not only our businesses, but American business generally will be doing fabulously better 30 years from now or 20 years from now. And the long term is very, in my view, is very easy to predict in a general way, but an important way. I don't think there's any way to predict what the stock market will do 10 minutes from now, 10 days from now, or 10 months from now. So I work on what I think I'm able to do, and as desirable as it might be to know what was going to happen 10 minutes from now, that's just not something I'll ever be able to master. So fortunately, I can come to a pretty firm conclusion that 20 or 30 years from now, American business and probably over the world will be far better than it is now.
Yes, that's what Mr. Buffett has to say. He would say, buy stocks if you get enough for your money. He would tell you to buy a stock if there's trouble coming. There's always been trouble coming, even since the first time he bought a stock back in 1942. All these views match up with his famous quotes like, if you weren't thinking about owning a stock for 10 years, don't even think about owning it for 10 minutes. And it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. That's some classy advice from a rich man. They live as long as the market lives. Well, to sum up, a crash is an unavoidable, temporary event that happens in the market. It's healthy. In the long run, the market trends upward no matter what, and the business you bought decides your returns, not the short period direction of the overall market or the pandemic. So don't worry, don't panic, keep calm, and keep investing. What are your thoughts about the crash? Is it good or bad? Leave a comment, let's discuss. So that's it for today, guys. Subscribe to my channel and turn on that bell notification. If you like the video, give it a thumbs up, share it with your friends, and tell them not to panic. Click this or click this to learn more about the stock market. See you in the next video.